Hi, and welcome to today's class, where we will be covering substantive testing. What is substantive testing? Substantive testing is concerned with the actual dollar amounts relating to transactions and balances. It is used to reduce detection risk, hence reduce overall audit risk to an acceptable level. It can occur at any time in the instance of transaction testing. However, balance testing is done on the 30 June balances and performed in July. It is concerned with the following things: existence of assets and liabilities, ownership of assets by the business, occurrence of transactions, measurement of transactions, presentation and disclosure of transactions and balances. There are three classes of substantive tests. There are tests of transactions, tests of balances, and there are also analytical procedures. Within each, we'll be gathering information and evidence in terms of transactions in relation to validity, completeness, and accuracy. In terms of balances, we'll again accuracy, validity, and completeness. And the analytical procedures will review the relationships between figures and highlight trends. Key concept within the tests of transactions is vouching and tracing. So what does that mean? Vouching is the move from source document to financial statement, whereas tracing is the move from financial statement back to source document. How do the objectives and substantive testing have a relationship? The selection of the test will depend on the audit objectives for each transaction class or balance. These correlate to the financial statement assertions made by management, as we did mention in an earlier session. They include completeness, accuracy, existence, occurrence, presentation, and disclosure, measurement, classification, valuation, and rights and obligations. So what are some of these procedures used to gather evidence in substantive tests? There might be an inspection of documents. There's observation of procedures. So a good example of this would be attending a stock take. They might make inquiries of management. They'll do confirmations, so they will write letters and check balances with debtors, or they'll perform analytical work. So how do we link these objectives to the actual tests that are undertaken? This summary table gives a really good indication of this. So for each of the objectives, it lists the tests that we can perform. If we are looking at the objective of accuracy, we can perform recalculations, reconciliations, and retracing. If looking at existence, well, we want to inspect site assets, send letters to third parties. Completeness, well, we want to compare balances between periods, check cutoffs. Valuation and measurement, well, we want to inspect, we want to inquire, we even want to do some recalculation and reasonableness estimates of estimates. In the presentation, disclosure and classification, again we'll inspect, we'll confirm, we'll inquire. We'll check against the legal requirements. And finally, rights and objections. We'll check ownership, confirm representation letters from directors. Designing these substantive programs. Well, the audit program itself gives details of the procedure, how to perform it, and the estimated timing. The working papers provide a record of the work done. The program reviews the client's figures in terms of meeting the audit objectives. Let's look at the substantive testing program for the cash subsystem. How do we link the assertion with the objective? Well, we have the first assertion for cash being existence. Our audit objective is to ensure that all cash items are reported in the balance sheet, and this can include petty cash and undeposited receipts, cheque accounts and the like. And we're making sure that they actually existed and were owned by the client at balance date. We are checking the assertion of completeness in that reported cash includes all petty cash funds, undeposited receipts and other cash, and that they have been correctly totaled. Valuation, well, how does that link in? Cash receipts and payments journals are mathematically correct. They've been properly posted and reconciled. Presentation, well, they are disclosed in accordance with accounting standards. And finally, rights and obligations. Cash items are owned by the entity. So what are the tests that we can perform for this subsystem of cash? Well, sending out bank confirmation certificates. We're reconciling the bank balance per the bank statement as we are with the ledger. We're selecting some outstanding deposits and tracing them to the cash receipts records. We're counting cash. We're verifying the sequence of vouchers. We're estimating reasonableness of interest paid or received, and we're confirming cash floats held. So the compliance and substantive testing have a link. The result of the compliance testing that we covered in a previous session will influence the nature, timing and extent of the substantive program. Even though control and inherent risk are low, some substantive testing may still need to be done. Substantive tests relate to detection risks. The greater the substantive work done, the more the detection risk is reduced. If control is high, then the substantive testing must be enhanced. If it is very high, then compliance tests will be stopped and greater substantive work will be done. And they always follow compliance tests. These substantive tests may reveal errors and irregularities. Page 230 to 231 discusses this in further detail. The types of errors that may occur include errors in principle, timing, miscalcs, or omissions. So what will happen is the auditor will compile a list of errors and they'll recommend to the client adjusting journal entries. The client will then carry out these adjustments and then adjustments will be entered into working papers. The draft trial balance will actually then be amended. Thank you for your time.